SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. I have travelled back in time to yesterday, 24 hours ago, more or less looking at the same thing, with the same analysis, which I suppose is good really, because my expectation is that the dollar is a shortable asset. Any kind of pump on the dollar needs to be shorted. I know that that's a very unpopular thing to say, especially it was last week when I was saying it, because people weren't seeing any signs or they weren't seeing things the way I was seeing it. Now that some people are slowly coming around to the idea that short every pump that you get on the Dixie. The dollar it's not weak, but it's a shortable situation right now. So short the dollar. I know it's crazy, but I stand in what I believe in, and so we can see that here. This is your over a decade long trend line. We've seen it a million times. We'll have a look at it again now, just for fun. We've been in this channel for when did it really begin? We call it 2006. So it's still holding strong, and we can see that even more so now on the 4-hourly, where we are literally tagging it bang and bang, and that was a steep projection, that one there. So we're watching this sort of, I suppose, breakdown below our eyes, in front of our eyes, below the cloud. We've not actually got a short signal on it yet. We would do soon if we start closing candle bodies on a 4-hourly below. Well, it's got to be about 111.9. Then we'll get a short signal on this, and that'll be enough to break us down below the 200 exponential on a 4-hourly, and we'll have an actual nice move down on the Dixie, and that could be the situation that we're looking for to allow for some upside in equities and maybe crypto as well. We're looking at the Japanese yen all on the 4-hourly, getting rejected here on the 10 exponential, which is also below the 21, which is also below the 20. So again, shorting every opportunity you get. I mean, I'm still in my short from over here, my hero's short position. I'm still in that. I'm hoping to hold that for a while. So the reason I'm boring you to death with currencies is because this is where the markets are getting moved at the moment. This is the foundation to which any major direction is going to be based upon. And still everything points to, it's hard to say it out loud, dollar weakness. Shouldn't really call it dollar weakness when you have such an amazing uptrend on a Dixie. But I suppose that's what it is in the short-term time frames. We call it dollar weakness. I'm expecting downside for the dollar for a few weeks. Euro, they're looking quite good as well. Symmetrical triangle, ascending triangle, breakout of both of those yesterday, and above 98, which is for me the area where we should be holding at this point, 98. So any position could be built on 98 with the expectation to move back to parity. So I'm not suggesting we break parity. We have to see what happens when we get there. But I mean, this is the support and this is the resistance. Risk to reward, it still favours the reward, doesn't it? Really. And the pound, despite all the madness which has been going on, still holding in its ascending triangle. And I'll be looking for this to also break out. To be honest with you, I'm quite bullish on the pound anyway. We've got a new Prime Minister again today. Honestly, we're getting through them like pairs of dirty socks at the moment. And I'm not saying that I like him or I don't like him. I've got no particular opinion on him. But I have a feeling that he's the type of Prime Minister who's going to try to bring the pound back up in its value, just to say that I can do it, you know what I mean? So fundamentally, I expect to see a move on the pound and a move back up. First of all, reclaiming 115, but probably back up to 120 or 122 over time. And again, the pound's not going to have an enormous effect on the Dixie, but it'll have an effect if the pound, euro, and yen club together as the Avengers, the currency Avengers. So that's basically the deal, really. Again, short the dollar, really. Short the dollar. And oil, just for fun. We had our move yesterday. It was a little scalpy trade. It worked out for what it was. And it looks like we're going to rinse and repeat that trade again. So longs to be scaled in at around 83. with tight stop losses, because that is a decent resistance, support stroke resistance. So it's a decent support to try it on. Right, so you come here for crypto, have you? Let's have a look at that then, shall we? So this is your 4 hourly. We've broken out of this descending triangle, and we're sort of in an accumulation-y type vibe going on right now. Now, what we can often see when you break out of these triangles like this is that you do sometimes see a breakout and then a retest of the support. That's not a bearish thing. That's actually quite good, because what we'd be looking at this time around if we were to do that is that we don't have this major area of resistance above us. So any position to be taken with Bitcoin, for me, I would actually think about scaling in some Bitcoin around here in anticipation for a decent bounce and then basically an uptrend to begin. You know, a breakout from a measured move from a triangle like this, when you measure the mouth, we've done it before, 26,600 is more or less the measured move on that one, and that would be taken over time. And that's what we'll be looking for. Now, if we turn on some of these indicators, what do we see? Below most moving averages, getting caught here so far on the 4 hourly on the 21 and the 20. We've also got the pump signal that was generated yesterday or the day before, early hours of Monday morning. So we've got to wait for that to play. So I'm in favour of Bitcoin's upside. You know that. It's the same analysis as yesterday, same analysis today. You know, it's slow, sideways, boring stuff, but I suppose it allows for people to dollar cost average and scale into positions if that's what you want to do. Me personally, like, I got enough Bitcoin for the minute. I'm really more or less looking for signs of trend at this point now before I start trading crypto again, because you know, we recognize every time we make these videos that traditional markets are where the moves have been made. If you see me on Telegram or Twitter, I mean, it's all traditional markets, has been for a couple of months now, since September. I made a promise to myself not to bother trading in September, not bothering with crypto specifically in September, because, well, just, nothing looked particularly good for it, to be honest. I do feel as though things are looking up now for crypto, but only through association with the way that currencies and dollar looks. We're yet to see a trend. We're yet to get above these major moving averages and the box of significance. And so until we do that, I'm not really interested in playing trend. Despite this pump signal on the 4 hourly, it's not enough for me. I do need to see some upside behavior on this one. If we zoom in a little closer here on the daily, what do we see? We're just about, just below the 21 and the 20, so not a perfect position to be taken at this very moment in time. So this is all part of the reason why I'm looking to hold off for a little moment, and I really want to see us reclaim these zones. I'll get back into this box, but arguably reclaim the zone and be above it and start to close above it on dailies. Now, if we have a look at the momentum on this, is still quite good. MACD's also, it's nondescript, sideways and up really, which is not a bad thing either. We've got momentum as well on the money flow index, so everything does point to the up. I have to say, everything does definitely point to the up, but as far as looking to make some instantly gratifying trades on crypto and things like that, when it comes to Bitcoin specifically, it's still pretty much sideways and boring really, and it's not, it's not reached the areas where I would feel comfortable in taking a position, because I might just be sitting in here and waiting for it to go a little lower, like my expectation for it to sweep this box before we go back up. So that would be my favorite scenario and something that I would be willing to play. I'm not looking to play this area. I would play this area for a bounce and a move up, or I'd start to build a position above, we'll call it 19,800, definitely 20,000, for a move all the way up to about 26,600 over the next few weeks, as in like multiple weeks. Giving it the time frame last week when I said about the Dixie doing its reaching its peak, and moving down to the between 5 to 7%. I gave that a period of 2 to 6 weeks to play out. People were like, "What are you talking about, man? Dixie's strong." Well, yeah, but I think with everything that I presented to the channel, I think it's going to have a bit of a breakdown now. And now we're actually seeing that. So again, telling everybody before it happened is difficult for people to digest unless they absorb all these other things that I'm saying that basically point to why that's going to happen. So now we're starting to see it happening. People are warming up to the idea that I had last week, but still we're yet to see it actually start to properly break down. But I think it's inevitable. I really do. I think the dollar needs to be shorted at this point now. I think any move up on the dollar needs to get shorted, whether it's pound, euro, or yen, and that should eventually like I say, filter through to traditional markets, whether it's commodities, stocks, indices, and maybe even crypto if we're lucky. So again, same analysis as yesterday, boring stuff, I know that. But if you want to join me on the Patreon live stream tonight, £7.50 a month, 2 live streams a week, I'll be there, 8 o'clock, and we can have a look at whatever chart, whether it's stocks, or crypto, altcoins, whatever you want, we'll have a look at them tonight. I think that we're on the verge of an everything bounce 2.0, so similar to the everything bounce we had in the summer, but that was I suppose a little bit easier to recognise because we were moving out of commodities into stocks. This time round we're moving basically out of dollars into everything, so it might not be as impressive as the everything bounce part 1, which was the bear market rally of the summer. Like I say, we got that pretty much to the T. Same thing with altcoins. We got them right down at their exact lows. All there on the channel, all there for you to see. I think that we could call this the everything bounce 2.0, but because everything is going to bounce this time, including commodities and currencies, that means the money is going to be spread over a much wider area, and I don't think the bounce will be as significant for something like crypto as it was as it was in the summer, which was a 2-month-long bear market rally that we got in right at the very bottom. This time we might be getting in right at the very bottom or thereabouts, roughly speaking, but I think the gains will be less because I still believe it's just going to be another bear market rally. I don't think it's going to be anything other than another bear market rally, but that remains to be seen. Again, a lot of this is going to be driven by the Federal Reserve and other central banks who can stoke the fire, basically, add fuel to the fire if they decide to make changes to their monetary policy, which will only accentuate the move, and we'll see what happens there. But as far as the TA is concerned, it definitely points to a specific direction for the dollar, which is down, which hopefully will transpire to upside for everything. So I call it the everything bounce 2.0, but I don't think it will be as long lasting or as plentiful as the everything bounce back in the summer. But either way, I am pretty adamant about it, and we're watching it unfold right now. And just keep our eyes on the currency pairs, because these are the ones that are going to force this move to take place. Anyway, I'll leave with you there. Nothing much more to say. I hope you have a nice day and take it easy.